Hey, my friend, it's Will here over at Pips and Gains, and welcome back to another weekly trading setup and breakdown. Today, we're going to be looking at a possible trading scenario for the week ahead on the Euro British Pound. We're going to look at the reasons behind it and why I think it is a great trading setup. So before we get into the good stuff, if you are new to the channel and you haven't yet subscribed yet, simply hit the subscribe button now, hit the thumbs up, show your support for the channel so I can keep on creating great content like this each week, hopefully to help you become a better, more profitable, consistent trader. So let's head into the good stuff. First off, we're going to head over to TradingView. If you haven't yet hit the follow button on TradingView yet to follow me, simply search for the FX Ace. You'll see my smiley face with the thumbs up and hit the follow button there. So what we're going to look at is Euro British Pound. Okay. As always, I like to look at the higher time frame charts first. This is where I look to find my levels. This is where you find the highest probability trading levels and allow you to see the market a lot clearer. So what we can see has actually been happening on this pair is that we've been stuck in this kind of range long term. I think it's since about 2016. Okay. And kind of just mark the barriers of the range there, and we're coming down towards the bottom of this range now. So what I'm looking for this week is a buying opportunity. Now I'm not just going to buy blindly down here. I want to zoom in to the lower time frames. I want to pinpoint the best area for an entry. So what we're seeing here is we've had this down leg here, then we had this period of accumulation, the bottom of the range, the breakout of the accumulation period, comes back down to test the breakout area of the accumulation, then rallies all the way up to this all-time high. Okay. So if you want to understand this kind of cycle that I just explained there will be a video above here on my playlist on the introduction into price action where I actually explain this kind of cycle here. So at the bottom of a move, a key and at a support and resistance area, supply and demand, buy-in area, whatever you want to call it, bottom of a range, you'll have a period of sideways movement, accumulation, and then the market rally up into the next cycle of the market. So we're now approaching this area here on the chart. Okay, we've had this the breakout, and then boom. This area here was kind of the origin of this huge leg up here to the near 93 high from last year. We're just going to zoom in a little bit more just to see what we can actually see here. The market does look like it's forming a bit of support here. We'll look at that in the lower time frames in a minute. And what I want to see here is the actual origin of the move that caused this high. And see the bottom of the move here. And this is the kind of area that I'm looking at here. Okay. If you look at the leg here, we've had this small rally up, and the pause, and then the leg down. And then we've had this huge rocket of a move up on the monthly charts. This is large players pushing the market up here. So this is going to be an area of interest for me to buy. And two areas for interest for me to buy in this pair. If this does break in, just down in and around here. That's a longer term. Again, these are short-term swing trades. My trades last anywhere from 1 to 5 trading days, sometimes a little bit longer, sometimes a little bit less. So that is it. Now we're going to zoom into the daily charts. And what I'm noticing straight away is over here. Okay. So if But this rally up here comes down to this swing low. The market pauses for a little bit and then boom, had this huge impulse move up from this area here. So I do expect some buying pressure in and around this area again. What we can see here, like I said, looks like it's forming a bit of support. But if you understand lower time frame charts, support and resistance areas don't hold for as long as higher time frame areas do. The more times they get hit, the weaker they get on the lower time frames. Normally. And so I'm expecting this to break to the downside. This is what I want to see happening. I want to see a break to the downside. The market to come down towards 84,500, down into this area. And then to buy. First possible target, this is 86. And we could go either way here. We could go up or we could go all the way down. And I'll explain that in a minute when we're looking at profit targets. So the initial setup is to buy at 84,400. Now there's two scenarios here. If you are the person who likes to set and forget, like myself, it will be at 84,400. And if you want to use my TRFX indicator, which I'll share with you how to get free at the end of the video, simply wait as price comes down towards 84,500. Wait for a signal to occur on a time frame like a 2 hour, 4 hour or 6 hour. If you do have the premium version of TradingView, you'll be able to create your own time frames like I have here. Either 2 hour, 4 hour, 6 hour signal when the market does come down to this area. Okay, so stop loss. Stop loss is going to not under this, won't be under this low. It will be 130 pips down at 83,100. So just well under this low here. So it is just well under 83,100. Just hide that. Look at the weekly charts here. Targets. This is if you want to hold it long term. So as we can see, the market was in a bit of a distribution period here, moving sideways. We broke out to the downside, had this huge leg down, swings high, and the market is looking like it's starting to come down to print the new swing low, which is here, down towards this area here that we're looking to get in at. Possible first target, 86,500 up to this area here. That looks like it's going to be causing this new swing low. So 86,500 will be the first target. The second target will be up here at 88,500 at the start of this area here. This is if you want to hold it long term. Remember, I use a break even point on the chart, meaning that when this position, when we get triggered and we enter the position and this pair goes our way anywhere from 80 to 100 pips, I then close 50% off the position, move my stop loss to the entry price, thus making the trade risk-free. We've banked 80 to 100 pips, we've moved the stop loss to break even, and then we just let the trade work out. And you can move this again when it goes up if it does go up to 86,500, take another bit of profit off, move your stop loss maybe up to 85, just trail the stop all the way up. That is the setup. It's a good setup for the week ahead. If we do get the trigger down in towards this 84,400 area, so it is, let's have a look here, I'll just text this up. So it is buy 84,400, stop loss at 83,100, take profit at 88,500. Again, break even when this goes our way, 80 to 100 pips. Move the stop loss to the entry price, close 50% off the position, move the stop loss again to the entry price, and then you've got a risk-free trade. If you want to do the manual way, which is using the TRFX indicator, there will be a link below in the description area of this video or in the comments section. Simply head over to it, enter your email. You'll then receive an email from me where I'll just simply be requesting your TradingView ID. Make sure you are following me on TradingView, and then check your TradingView account within 24 hours. Check your invite only scripts in the indicator section, and the TRFX indicator will be there. So if you would like to get access to my full list of trading setups for the week ahead, which includes the weekly live stream breakdowns and the weekly live stream setups, there will be a link in the description area of the video. Head over there, sign up, and start receiving my weekly swing trade setup. So I hope you enjoyed the video. If you did like it, make sure you like and comment below. Have a fantastic trading week, and I shall see you on the next video, well over pips and gains.